making sure we have the best possible way of making and designing a product to be most efficient and also best in class. I think in my mind, those are the three levers you pull up: operational, capital goods, and then ultimately the capital structure and land that allows you to do that. Verticality, if you would have asked me this question, what helps you? It helps us be the lowest cost manufacturer in the industry to balance both things. Your investments and your overheads have to kind of go in sync. You can't have one lagging behind the other.
Hi, and welcome to Barriers to Break Beyond Business. I'm your host, Dev Makkar, and on this show, I interview some phenomenal business leaders and entrepreneurs in the wholesale and manufacturing sector. Now, I personally am not from manufacturing, but I am a founder. I founded Sourcewiz, a B2B commerce platform, which gave me the unique opportunity to meet a lot of people from this space. And it's given me the realization that the effort it takes to get a product from a factory floor to the retail shelf is not trivial. These founders have amazing stories to share. They have real battle scars. They've had to take hard decisions and they've built large scale businesses which power most of today's economy. I believe their journeys are worth sharing, and so here we are. Today, our guest is Shekhar Gupta of Devgiri. Devgiri is a wholesaler and manufacturer of home textile products, and they supply to some really large retailers as well as some big box stores in the US. The unique thing about Devgiri, though, is that it's a vertically integrated setup. It's a business model that everybody wants, but it's a very hard business to build. And Devgiri has done a phenomenal job of scaling up through COVID. As we enter a recessionary phase, we would hear from Shekhar Gupta what kind of choices they are making now. How did they scale up exponentially during the COVID period, and just the journey of Devgiri and how they turned from a one factory to now a very large vertically integrated setup in the rugs space. Hi Shekhar, welcome to Barriers to Break podcast. Thank you so much for joining us today.
Hey, Divyanshu, how are you?
Good. So, Shekhar, I think there's a lot that can be said about Devgiri, but we would love to hear about Devgiri from you and a little bit about yourself.
Devgiri, I think Devgiri started before I started. I would say, I'm the second generation in the business. It's been over 30 years since my elder generation started the company. I think it was started during the time when India was just opening up to the global economy. Just around liberalization, early 90s, late 80s, and entrepreneurship, grit, hard work, all of those things, can be said about us, can be said about a lot of the other companies. But I think we've also benefited a lot from the India journey, India story. And my entry into the business was another inflection point. I joined the business in 2008, actually, at the peak of the financial crisis. I remember the first week I landed in US. That was the week when Lehman Brothers collapsed. So that's when I joined the business. Some said, many of my friends said that was a stupid decision. Why would I do that? That was before I decided to join the business. That was like 6 months after I graduated, and 6 months later, Lehman Brothers collapsed, and then I was the one telling them, like, maybe you you picked the wrong career. I was the smart one after all. But joking aside, I think I have uh, I've approached this more as a professional. Uh, I've undergrad. I went to Delhi University, Sri Ram College of Commerce, had a business background growing up. Then went to IIM Bangalore, did my masters there. So I always took, even growing up in a family business, I have always taken a more professional approach to business. I have always held a belief that uh, entrepreneurship and getting business started is probably the most challenging thing. Uh, it's a little easier to take over a running business, but then keeping it strong and making going it strong requires a slightly different skill set. And I think it's that understanding. I think my management degree gave me that understanding, and I think once I hit the ground running, I would say it's been a phenomenal journey. We've seen a lot of ups and downs more recently with the economy and stuff. But overall, I think it's been a really great journey, and it's just different phases of entrepreneurship. Taking a running company and scaling it up as opposed to starting from scratch. So my experience is more on scaling up, 10x, 20x an established business, which is where probably my insights would be more helpful.
Makes sense. And it's interesting that you mentioned that this started when India was just liberalizing. And I think back in 1980s, 90s, India was slightly ahead of China in terms of its export volumes, if I'm not wrong. And then
Mhm.
tables turned somewhere and China just really took off. And I think that's a topic that we will reserve for the end. Just talk a little bit about the manufacturing opportunity in India. To start with, I think why don't you tell us more about Devgiri? You know, what is it today? What are the different verticals in the company? And what does it really do?
So Devgiri, it's a hardcore manufacturing organization. We are in the home textiles and rugs space. When I say vertical, truly vertical. So yarn spinning, weaving or tufting, printing, cut and sew, finishing, packing, shipping, distribution in US, drop shipping, e-commerce, you name it. It's a one-stop shop, vertically integrated manufacturing entity. A little bit about the founder of the company. He is a mechanical engineer, and when he started the company as a manufacturing organization, I think one thing I have no engineering background, but we all learned and kind of grown to be sort of have that mechanical engineering mindset, nuts and bolts. Like when we look at a problem, when we look at an opportunity, when we look at a product, I think we are known for getting to the root of it, making sure we have the best possible way of making and designing a product to be most efficient and also best in class, and have the right value. So I think and I would say from a differentiation perspective in our industry, that kind of sets us apart. In This is a fairly design-led, fashion-led industry. To have a mechanical engineering background, or an engineering background in general in a design-led industry has really helped us set apart and overcome some of the scaling challenges that some other companies in our industry have faced, who continue to take a design approach, which is nothing wrong. I think taking a design or fashion approach is really helpful. But I think scaling beyond, just your comment about China, and I know we'll get into it later, but one of the big reasons why we have excelled or thrived is because of that scale up manufacturing mindset and technical mindset that helps us bridge the volume gap. Because design and fashion at a certain point has its scalability limits. At some point, it's about hardcore execution, technical design, manufacturing design. And I think we do that really well. And then we complement ourselves with really good talent to bring the design in the fashion sense.
Got it. Got it. And one of the things that you said, it's truly vertically integrated. And I at least don't think there are many vertically integrated setups in India. So tell us a little bit about why you took this approach, why Devgiri decided to sort of vertically integrate and not just focus on one part of the value chain, maybe just wholesale or just hardcore manufacturing of the end
Yeah,
product.
I would. So one place I would disagree. I think there are companies that are vertically integrated. I think
Okay.
there's definitely. I think where they exist are more in white goods, so bedding, towels, more commodity oriented products because it's a little easier. But there are world class manufacturers in India who are fully vertically integrated. Everything from scratch in a million square foot facility. I think where we differentiate is we've been able to add verticality to a more complex supply chain, where there is a combination of handmade, machine made, different processes, more fashion driven, where the volume sometimes per run may not be as high. And I think it goes back because of our mechanical engineering roots of the founder and kind of that DNA running through everybody in the organization, I think helps us. And also, how are we different? Like there are a lot of other organizations in this. I wouldn't say it's easy to take a fashion or a creative outlook towards the industry. I think it takes a lot of hard work and a lot of talent and natural talent to do that. But I think it's in dare I say, I think it's a little overcrowded in the market with that. So I think we had to take a slightly differentiated approach. And with our mechanical engineering mindset, I think we were able to combine the two. So which is why I think we've been we've been taking that approach of verticality in our space.
Got it. Got it. And just in terms of sort of verticalizing it, right? So, what are the major milestones that you can talk about? Like, when did you start your own spinning unit? When did you?
It's we don't look at business that way. I mean, if like I like we don't look at it's we grow very organically, like as crazy as it sounds. Like we are making investments, not, and that's why we don't look at history that way also, because when even when we are looking at the future, we are not looking at we gotta hit a certain number by this year, or we gotta hit this new capacity, or this new yarn machinery, or this new dyeing plant, or this new processing equipment. We never look at it. We don't set the goals then go meet them. I think we read the market. I think we look at the opportunities, and maybe some years we have a $20 million investment opportunity, we invest that, and then maybe other years we have no investment opportunities, and we know, and that's how we've grown. So milestones are driven more by industry events. So 91, 92, when Indian economy, the rupee declined 25 to 30% in span of 2 weeks. That was a huge milestone because the export industry just got a boost like none other. Our business probably would have tripled or four times in that 1 year, but that had nothing to do with us. That was like a moment, but we were ready to capitalize on it. Same thing in 2008, or 2000, the dot-com crisis is in 2008. So our milestones are actually aligned with the industry. Anytime there was turmoil was actually the time we hit the milestones because we were reading and we were investing and reacting to those milestones. But it was not like we were trying to get a 10-year target or 1 year target or 6 month target. It's never been like that.
Got it. And just to summarize the topic on verticalization, right? What are some advantages of having a vertically integrated setup, which sort of helps you differentiate in the market?
I think so. Originally or initially, I think the idea of verticality has always been associated with cost. Getting to because the fewer entities are in any supply chain. In many of our products, like a handmade rug, there could be 10 to 12 processes. In a curtain or a textile product, there are fewer, but there are still at least four. A guy who makes the yarn, then a fabric company, then a processing company, then a cut and sew company, and then a shipping company or a distribution company, but minimum 4 to 5. So the idea of vertical was essentially to go with the lowest price. I think with technology and with the disruption in the last 5 to 7 years, I think scale and verticality also makes you more nimble, which was not the case going back. Sort of, if I when I first started, like the first 7 years, 8 years in business, like it was verticality. If you would have asked me this question, what helps you? It helps us be the lowest cost manufacturer in the industry.
Yeah.
How verticality has helped us or scale helps us now is it also makes us the most agile and the fastest because of supply chain disruptions globally. If you control majority of your processes, you are not impacted by the same issues that many of your competitors are. So you can innovate at a rate much faster than some of your competitors. So I think it has helped us in many ways. I think today the answer is more than cost. It is about the agility and the ability to innovate, be creative, the scale. It's crazy. Like the bigger you are, the more creative you can be in today's world.
Got it. Got it. And what are the challenges? Because I would imagine all of these units run like separate businesses in themselves, right? So, in just sort of operating such a large setup, is that challenging? And how do you sort of within the company divide those responsibilities? And what are some learnings from there?
Yeah, I mean, yes, like the complex business. It's a lot of different moving parts. I think I would say it starts with the kind of people that associate with us or that we associate with, I should say, are comfortable thriving in a more complex environment, or they enjoy that. Like, it's like I always believe there are two types of individuals: some people who like simplicity, people who like complexity. Nothing wrong in either one of those, and there are plenty of opportunities for both in business world, in career, whatever. But I think typically people who enjoy working with us or in our setup are people who like that complexity, who enjoy that problem solving, and sort of more dynamic nature, because I think that's what truly comes with having such a diverse set of like different units for doing different processes. But then you also have to have a lot of cross working, a lot of conflict, because when you're working with an external entity within your supply chain, it's very easy to point the finger and say, hey, you did not do this right, which is why this is not happening, or your cost is too high, which is why the product is not selling, whatever. But if it's your own entity, you're essentially having a conflict between two people working for the same company. So that resolution, you can't just, hey, I'm going to switch off to a different supplier. Well, you still have to exist with each other. Like, you don't have a choice. So, you have to do more problem solving and be okay with it. So I think it's more people driven than anything else. I think that's the biggest, reason or solution to that is unlocking that requires a certain set of. It's not easy. It's being built over time, and most people stay with us like throughout, like very very little turnover to help with that. And I think that's really the biggest reason, I would say.
I think you mentioned agility, right? And that how sort of being vertically integrated helped you scale up. And I think in one of our initial conversations, you spoke about how you took advantage of the COVID supply chain disruptions and how the business grew so rapidly there. And to be honest, like coming from the tech world, I've heard of blitz scaling in tech, but I've never imagined that factories can scale up to that extent, right? So I think that's something that I really want to cover today because that was very counterintuitive for me and a big learning that you can do that in a setup where there's this operational control, like there's just a lot of people to manage, a lot of infrastructure to build compared to like tech where I mean it's a software, so you can just push the pedal on one or two fronts and you can really scale up. So tell us, number one, where you started from pre-COVID, where did the business reach, and just let's just talk a little bit about that journey.
I think so. I mean, I wouldn't. I think blitz scaling is hard in manufacturing. So I think because when I read or hear or understand scaling, I think you're talking about exponential growth or like just
Yeah.
in manufacturing you cannot achieve that scale of growth no matter who you are. I think from a manufacturing context, I think having the verticality gave us the necessary platform to reach 100% utilization. So, I mean, one thing, nobody in manufacturing, especially in textile manufacturing or rug manufacturing, nobody ever operates at 100% capacity or even close to it, right? That's been the general norm, is you operate at 60, 65, 50 to 70, like somewhere in that range. So with the non-vertical companies, reaching 100% is tough because they are reliant on others to also be able to hit, and then all the supply chain issues, where is the raw material coming from, where is this coming from, where is that coming from, where is the dye is coming from, like everything is connected. And so you cannot hit your 100% utilization if you're not completely vertical. You can hit 100% utilization because you are vertical. And so having that 100% utilization was step one. I think the step two was finding key investments that can be scaled up in a shorter amount of time. Like, because I think in our industry, COVID really was a game changer, because I think we'd never seen a demand cycle quite like this. Nobody had. And
Yeah.
the moment we experienced that, like everybody had choices, right? Everybody you could go a lot of different ways. Like there was more demand than people had experienced in years or decades, I should say. So at that time, I think our choices were driven more by the fastest growth opportunity would come, which would require, forget the amount of investment, but what can be invested, and start to finish, let's look at that, because there's this opportunity, that this, you can go in so many different directions. So I think we started picking off on things which were easiest and fastest in terms of scaling up in execution. I'm talking capacity, capital goods right now, not sort of buying and selling. I think buying and selling or merchandise, like transportation and stuff, we were helped out because of being vertical. So we had minimum friction points. Capital goods investment, which is the second lever for growth, we wanted to go after things that could come up and be set up in 6 to 9 months. And then the third part, which is which helps with growth, or what you call blitzscaling, is capital and land. And that comes from years of fiscal and financial discipline, of being not leveraged, being very savvy with land acquisitions and capital structure and things like that, because then you have the capital flexibility. So you need operational flexibility, which comes from verticality. You need the right investment strategy, which means you put the money in the fastest projects possible. And then you need the capital and the land to invest in those machines and have the land to put those machines. So those are the three
Yeah.
ways in manufacturing. I think that's true for every industry. I don't think that's true for us. I think that's true for every industry. But that's, to me, that's kind of the model. If you, it's not blitz scaling scale per se. 2x growth in my mind is not blitz scaling, or even 3x growth. I think in tech, I think you guys go 10x and 20x and 100x. That's what blitz scaling is. In our business, 2x or 3x from a manufacturing concern could be classified as one. It's just the blitz is too fancy a word for that. But I think in my mind, those are the three levers you pull up: operational, capital goods, and then ultimately the capital structure and land that allows you to do that.
Got it. Got it. And that comes back to your earlier point, right? That every time there's a macroeconomic disruption, you were in the right
Yeah.
place, but also had the right infrastructure to sort of
Correct,
capitalize on that.
correct. Yeah, and I think to that point, one of the big reasons we were is because we had not committed ourselves to these lofty goals that were set because of a fiction of our mind, right? We were not chasing this idea that this is who we want to be, or this is where we need to be. So our bandwidth was open. Both our factory bandwidth was open, our investment bandwidth was open to be able to react to this opportunity. Because if you're committed to
Yeah.
something and then the direction changes, it's very hard to recommit your resources, especially with everything falling apart around you. So I think that's been a consistent theme for sure.
And you mentioned like the second lever of growth, which is capital investment, right? Which assets could you invest in, which can sort of turn around in 3 to 6 months or give you the fastest sort of path to growth? Tell us a little bit about. You said there were a lot of choices. So what were the choices that you were evaluating? If you can talk about the choices that you took.
I think some of them are being played out, so I can't get too much in depth because I think we're still living that cycle. But I think with COVID also came supply chain diversification across the world. So I think I would again bring the India story back into it, because I think um, as most retailers, definitely in US, but even globally, have started, sort of waking up to the potential of India as a country of choice, and also trying to de-risk their current supply chains. I think India has emerged as the destination of choice, and us being the leader in our categories or our industry in general, and the positioning that we have, that brings with itself the choices that we could go after in many different ways, or we can approach that. So that's where I think how we made those choices. I think that's where product diversification, we were predominantly a natural materials company. Then we started venturing out in synthetics, then
Got
went
it.
from predominantly handmade to machine made. And I'm talking like a 30-year horizon here. But I think that's been kind of the capital goods choice over the years. More recently, it's been about, like, we are a rug company. Can we get into bath textiles? Can we get into kitchen textiles? Can we get into window textiles? Can we get into bedding textiles? Towels, comforters. Like, there are so many choices. So that's what I mean when we have choices, is where else could you diversify?
Categories can you open or
Yeah, yeah,
or
yeah. And I think we made some calculated risks in terms of what is the, like, same theory. What is the fastest one that we can get up to scratch, and what is the most allied to our current products, so that we don't have to start a whole new selling channel, right? If somebody is buying, let's say, bath rugs from us, shower curtains is easier, as opposed to then go find a bedding buyer or a bedding company to sell bed sheets. Because
yeah.
we have no context. But if the same person is buying kitchen rugs from us, maybe we'll sell them kitchen textiles
Yeah.
rather than going and chasing towels, or something like that, which is completely unaligned category. So that's just one
Yeah,
example.
because you're keeping the buyer same. So the buyer already has
Right.
trust, you already
You
have.
have something, like any industry or any, like, you an established player, but when you're getting into a new category, you have to have a connect. You have to have a reason for being. What is it that you're bringing? Like,
Yeah.
as opposed to the incumbents, other than just the country of origin, being changing from whatever to India.
Yeah. And how much of the choice was also driven by what can be a cost competitive category from India, or do you think all like pretty much you can get to like some kind of cost competitiveness in all of these categories?
I think if for I mean for a vertical integrated company like us, I think cost competitive never is an issue, because we are either cost competitive today or we will become cost competitive with scale. Our unit economics works very differently because of verticality, but I don't see, uh, in the larger context, I don't see very many categories that in home textiles and rug and like this space that will not be competitive. Like India should be the most competitive destination there is, bar none, in the world. I think it's just more about infrastructure and are the companies willing to invest in that. And I think because we've had those investments, I think cost competitiveness wasn't necessarily a deciding factor for us.
Got it. And one thing that I wanted to get your opinion on. So during COVID, you were seeing like a large demand of home textiles, right? And uh, were you of the opinion that this is going to remain like this, or did you guys internally talk about like, okay, this is a blip, this is because of this 1 or 2 year horizon, and so we should calculate our bets according to that, because you don't want to like invest so much and then suddenly hit a low cycle, right?
Right. No, I think that's a good question. I think I would say most relevant in the current context. I think uh, everybody who's in this industry is feeling that in terms of, and I would say no matter if you're in business, I think everybody you talk to, I'm no exception, I think knew
Yeah,
that this is not going to last. Like, the demand cycles don't last quite like that. Our industry is not that cyclical, has never been that cyclical. I think it's more organic growth year on year. Having like this kind of growth curve or growth opportunity is rare. I think we caught a lightning in a bottle, honestly. I don't think that's going to happen again for another 50 years. But the idea was what made it easier for us, and I think should make it easier for everybody in India, is so you have the secular growth trend and then you have this event driven growth trend. One thing with capital goods is, or manufacturing in general, because it requires so much capital investment, is you're in you invest not for current growth, you invest for future. So your investment and your cash flows, they grow in spurts. Like you grow and then you're flat, and then you grow and you're flat, and then you hope the revenue just catches up to it. And
yeah,
so the question you're asking is very challenging in our context, is because we were making this capital invest where revenue might actually come down. What made choices easier for us is the secular growth trend that is going to come India's way, no matter what happens. You're right. So yes, there might be a blip here and there. Obviously this year wouldn't be as great as 2 years ago because we were at the peak of like home textiles demand globally, stimulus checks and inflated economies and all that. But eventually, your typical payback cycle of any capital investment being 5 to 7 years, you might have a blip for 1 or 2 years because the secular trend line will continue to point up for India. Those investment decisions became a lot easier for us because whatever decline is will be a short-term decline, and then things will rebound again because people are looking to diversify from other countries. And if you use this as an opportunity to get into those businesses, you have like a 5 year runway to continue to grow after that. So that's in a nutshell why this problem was not as acute or should not have been as acute for Indian manufacturers, because you'll be there's no way those demand cycles would have continued, but there is also no way that the trend line will not continue also. So it'll kind of merge in like another couple of years.
got it. And so, is this safe to? So, during COVID, of course, supply chain disruptions, China was closed. People suddenly woke up to realize that they need to diversify maybe faster. Maybe they were already thinking about diversification. It was just a shock, so you sort of have to react faster now. But has that reaction now slowed again since sort of sort of China is opening, or do you see the intensity of that sort of diversification still remains the same?
I think again it applies to the retail world much in the same way. I think the larger you are as a retail organization, and I won't name any names, but the larger you
Yeah,
are, the more you can continue to remain on that path of diversification because you have the scale to make it happen. Some of the smaller players have to live within the realities that, well, everybody wants to move to India, but where is the capacity, right? Where is the technology? Who are the players? Who can you work with? You don't have the volumes. You can't like move the needle. So I think depending on what your scale is, people have decided to either shift back to China or found a middle ground. And then they're just biding their time. I would say, in my experience and my exposure, communication, I think as far as the intent goes, there is no change. I think everybody wants to move to India as fast and as soon as they can. But they're running a business. They have to be profitable while they're doing that. They can't, they can't have that goal and then start losing money because they have these lofty goals. The bigger companies can because they have a bigger war chest, but the smaller companies can't. So they may have redirected some of that because they're just waiting for the capacity and the supply chains to catch up in India and elsewhere also. I mean, if other countries catch up as well outside of India, they'll have the same benefits to reap because the intent is definitely there. Whether the execution happens or not depends on how large you are and how much of a how deep your pockets are because you can really fast track it.
Got it. Understood. And then coming back to recession, right? Like recession or sort of a demand slump has come, and you were in this sort of years of like rapid growth, and then the slowdown came. So, what were some of the hard decisions you had to make, or were you sort of in some ways prepared for this?
I mean, yes, I think, and I think the tech industry is probably. I think I should ask you that question more
Yeah,
than you
yeah,
asking
yeah.
me. But I think what you guys are doing is we are doing the same thing in a slightly smaller way because I think what happens with massive growth is everybody kind of. And when I say everybody, and I don't mean this as a slight or anybody, but I think organizations in general. It's not people driven, but organizations in general uh, get used to that level of activity and growth. And businesses, leaders, us included, entrepreneurs, everybody starts planning their cost structures around that. And when the business goes down, uh, you have to reassess. So I think the first hard decision we had to take was, uh, do we maintain the overhead structure in planning? Like I said, the secular trend line and all that other stuff, it's going to go up at some point. uh, what are you going to do about it? So the first hard decision is, do you start cutting uh, and not be ready for that growth, or do you hold and you have the cash flows to maintain so that you are prepared for that growth? I think each company in their journey is at a different stage. Us being an established player, we took a we took a shot. Like, what makes us is we want to retain the people, we want to retain our management and our structure and be ready for that growth curve because all the investments we are making. And if we made, so on one hand you made these capital goods investments, land, building, whatever, and then on the other hand you're letting people go. So even when the growth opportunity comes, you will still not be able to capitalize on it. So what's the point? So I think you have to. So for us, and then we had the capital structure and the cash flows to do that. So that's the decision we made. um, for some other companies, it would make more sense to cut because they didn't make those necessary capital investments. So what's good with additional people, just to do what you were doing? Like, you have to balance both things. Your investments and your overheads have to kind of go in sync. You can't have one lagging behind the other. And that's what I think you do at a recession time is you align your overheads with your investments, because if your investments are there and you see growth opportunities, you hold on to your overheads a little bit longer, and then you hope, and then obviously you have to have the cash flow to do that. But if you haven't made the investments and then your overhead is escalated just because your day-to-day business was that high, I think in my mind the right strategy is to right size it. But ultimately, the most important thing we did is, no matter whether we keep people or lose people or cut overheads or keep overheads, whatever, is to talk to our people and be upfront and make sure that while the going was good, it was good. Now it's tougher. So everybody has to share in that. And when I mean share, I think it's more a mindset thing that you just have to live. And I think, again, like I said, the kind of talent that we have and the kind of people that we attract or that get attracted to us, it wasn't very difficult. I think everybody was like, yeah, makes sense. Everyone shrugged their shoulders. And I'm talking when we have more than 10,000 people. So, it was a relatively easier conversation because I think people understand, like they're very practical in terms of, yeah, we have to hunker down, we have to work a certain way, we have to approach our customers a certain way, and so on and so forth.
Got it. And since I mean you guys have been around from 1980s, so I'm assuming there's some wisdom around how these cycles go or how we've seen or lived through some previous recessions. So what are some of those things? Are you guys drawing parallel to some previous recessions, or is this or are you approaching this in a unique way? Like you don't know how long this is going to last, and
Yeah, I think every recession is a unique recession. I think every boom, every recession, I think it's the
it's
only
my
people
first
who.
one. I really don't know.
First one, right? Yeah, so I think I started my career in a recession, in the peak of a recession. So and then I saw the boom cycle, and then I'm saying the second one. But I think everyone is just talking to other, people who founded the company. I think uh, it's every cycle is a different cycle, and I think drawing any parallels is very challenging. I think each set of circumstances is very unique. uh, I think one of the things I've learned coming from a B school into a family business setup and now running the organization, like the sales organization here within our company, I think we sometimes outside world, especially the education side and the management and the consultants, and everybody gets very attached to the macro.
Yeah,
But what I've learned running the business is macro, while important, uh, does not run the day to day like strategy and like where you're going. And I think sometimes we get attached to the macroeconomic cycles and conditions just too much because it's an easier way out. I think the micro individual opportunity, yes, businesses, okay, US economy, our industry is declining. Sales will decline probably double digits this year. It was on top of double digit declines last year. But there is still enough business for me to pick up if I work hard enough or if I'm smart enough about it as an individual business. My sales team still needs to come up with a strategy to sell. And like my manufacturing team still needs to come up with maybe design new products, maybe design this. Like I think what happens is when we start believing in the macro too much or the cycles too much, that's when that kind of fatigue or lethargy sets in. It's like, well, let's just hold until things turn around and then we'll do something about it. So that's just my personal belief. I don't know if it's true or not, but I think that's just more a personal belief where I think I mean, I love economics. I read a lot and I do all that, but I feel like a little bit, it's like, all right, yeah, it's that person's opinion or that expert's opinion around when this will turn around or not turn around, or this happened in the 80s or the 20s or the 2000s. But each cycle is different, and each cycle for an individual business is completely different. Like if I were looking back at 2008, I disrupted a lot of established players' business in 2008. What I'm protecting myself around is I don't want another Devgiri coming and disrupting me in this current recession, right? That's what I'm protecting. But then somebody who's in my position in where I was in 2008, they should be looking at this as an opportunity. Why can't I disrupt this guy's business? Like, so I think that's what everybody needs to be thinking through. I need to protect myself against, because I know some upstart would come and disrupt my business. And I need to do the same to protect myself because I knew what some of the things that I did and what I would have done to protect against myself. So it's kind of crazy, but that's how I look at the world.
got it, got it. Coming to sort of managing this vertically integrated setup, so many factories, right? So, what role has automation and technology played in helping you manage such a large operation?
I think automation and technology. I mean, it's part of the game. I think, but I mean, it's like I said, engineering. I said up front, like that's kind of runs through the DNA of the company. Uh, staying ahead of it, be open to new technologies. I think, I mean, especially nowadays, I mean, with analytics and then now with AI, like it's sky's the limit. There are two parts. I think being exposed to technologies is one thing, and being open to embrace them. I think we have both of those things. I think where we have some work to do as a country and as an industry, manufacturing in general, and textiles in specific, not us included, is the implementation of those technologies at a ground level. Because I think uh, we as a country, I think India and US for that matter, both our US teams and India teams, don't quite have the same level of technology exposure. Uh, and I think what the work that's being done by you guys and the many other companies in this space, bringing technology into more traditional industries. I think what I've been focused on is how do I use partner with the right companies, uh, and then figuring out how do we implement it in a traditional setup with people who don't have technology exposure. Everybody has a phone, they know phones, but beyond that, implementation on a day-to-day basis is really challenging. And most of my experience so far, whether it's ERP or automation or analytics, I think that most technologies have a lot of friction at the implementation stage. And the last thing you want is expect people to just fall in line, because if
Yeah.
any technology that makes their life more difficult, we are just doing them a disservice, and eventually their productivity will fall, because if you're asking them to fall in line, so it's a combination, training your people but then also making technology more user friendly, because you're finding the path of least resistance no matter what you do. So why can't you design the technology to have the path of least resistance? So like, why can't we merge the two, and then eventually it comes to, so I'm not saying cultural changes are not needed, I think they're definitely needed, but I think companies like ourselves are really focused on finding that way of implementing at the ground level. So we have to find the right companies to partner with in the tech space. Oh, and then the last piece is we have no comms, like we are not a technology company, so that's why we rely on the right outside partners, whether it's automation or analytics or whatever the case may be. So that's really our focus, and then implement it, scale up, and see where we go from there.
Got it. And I think that's related to the point that you said, like that you have very low attrition. That means a lot of people have been, there for a long time, and they might not be as exposed to the current technology as somebody young in that position. So, making it user friendly. But how do you sort of change their mindset around? Because I feel like no matter how user friendly a technology is, there is some inherent sort of
Yeah, I
effort.
think it's a million dollar question. It's hard to do that. I think it's a trade off between uh, training people and then bringing new people in who are more experts, or not experts, I should say, more comfortable with embracing new technology. I think our approach on this has mostly been, people would want to do things the simpler way, right? So I think if you can give them something simple to do, you just have to prove to them that this is better for you and train them. So I think it's about, like, no matter, like, and especially in both the US and India, I think the mindset that everybody is very simple. Like if it's a simpler way to do it, people are very open to it. Like stubbornness ends. And I think one good thing about our organization is nobody fears technology, that it's going to take away my position, because that's another fear sometimes in technology. That's not the case with us. But I think we have product experts or subject matter experts who may not be as open to new technology because it just creates too much friction. So I think it's training that it's actually going to be to your benefit in the immediate future, not like 5 years down the road, but tomorrow. Let's just work with it. So I think that's how you get the buy-in, and
Got
then
it.
you work towards. It's a journey. I think it takes time, but I think the idea is to train everybody that it's going to be simpler, um,
Got it.
to
So, Shikhar, you spoke about user-friendly technology. So tell us a little bit about your experience with SourceWiz. Why was it one of the things that you chose to implement and spend your time on, and how has the whole journey and experience been?
Pretty good. I would commend you guys. I think I think it's been about a year now, year and a half. I don't remember, but I think this it's part of it. Like we have four or five different pieces of the technology, like this technology universe that we are working within. And I think SourceWiz, we decided to partner with you guys because of uh, your focus on, like, most of the technology was coming more on the manufacturing side, or inspections and audits and things like that, machine automation, which was very important. But there was nothing in the market for like more sort of customer facing technology for the manufacturers. I think it was everything was backward integration and backward from a manufacturing point of view. This was a good first time we saw a good tool which was forward facing, which would help the sales team, customers, design partners, and so on and so forth. So I think that was the reason why we found it. And then the reason we stuck with it is because I think you guys have a pretty user friendly interface. I think your interface and in general, I think the user experience overall is really sharp. So I think that's something you guys should continue to sort of keep that works to your advantage. It's simple, it's fairly intuitive. And the last piece, I think the service has been really good. I think we like talking about like implementing something like this in an age-old industry, especially with handmade products. I think it's not an easy task, but I think we are committed to it, and I think your team has done a great job on that as well. Sort of try, trying to work eliminating it so it doesn't remain something that's a fancy tool, because if it remains a fancy tool, it's very hard to justify ROI over a long period of time. Because then you use it, it's a toy, it works. It has to completely embed in the system for it to become sticky. And I think, I, I mean, I think you guys are doing a good job at sort of working with our teams to making sure that that does get. But that's our goal, is to make it like second nature for everybody, that everybody starts using it and basically gets rid of spreadsheets and PPTs and things like that. That gets done on a day-to-day basis, like thousands and thousands of lines being written and PowerPoints being created and photos being inserted and copied and pasted in Dropbox folders and all of that. So I think I see that future. It's going to take a while, but we are committed to it, and I see the commitment from your team. But like that's the key is we see the future, and I think you guys have done a very good job. But the starting ingredients were very solid, which is why we chose SourceWiz, and I think the success has been that so far, that the user interface is very, very, very strong.
Perfect. I think that's all from me. You've been super generous with your time, and I'm really grateful, for this conversation. I think there was a lot to learn for me and for the rest of the manufacturing world. Any last comments, anything that you want to end with? And if there's one advice that you can give manufacturers who are trying to replicate Devgiri's journey, what would that maybe one advice be?
I think I'm not gonna do that. I don't. I think. I mean, I think there is enough there for people to read. But look, there is no secret sauce. There is no magic. I think it takes time. I think that's my advice for you. That's my advice for the manufacturing community. I think it takes time. I think I personally believe if you have the right product and the right ingredients and the right solutions, I think eventually, if you have the staying power, eventually things kind of fall into place. But other than that, for the manufacturing community, I think everybody has their own journey. I hate to sort of put my thoughts on somebody else or do this or do that. Everybody has to find their own journey. I think scale, whether you're a large company or a small company, doesn't necessarily make you a successful business person. I think scale sometimes is overblown in our minds in general. I think
Hmm.
you have to be at a scale that fits your particular surroundings and your particular environment. Like whether you're at 10 million or 100 million or a half a billion or a billion, a $10 million company in my mind is as successful as a $1 billion company, depending on, are they on the right track? Do they have the right people? Do they have the right systems? Do they have the right mindset? Are customers happy with their products? Because who's to say that that $10 million company won't be a $1 billion company in the next 10 years if they keep on that, and vice versa for the $1 billion company. So that's why I think the solutions are hard to uh, like replicate across organizations. I don't think there is one size fits all.
Got it.